Morning traders, welcome to the TraderLab. I'm your host, Tom B, streaming from Costa Rica. Hope you're all doing well on this Tuesday. Can I please get a screen and audio check in YouTube and the Bookmap Discord TraderLab community? Thank you, Marty. How we doing in YouTube? We okay over there? Welcome everybody to the TraderLab. I'm your host, Tom B. Appreciate you stopping by today. This stream's about integrating Bookmap order flow tools with auction market theory using the volume profile in the intraday developing time frame. It's based on structured trades. These are available to all of you at no cost, as well as the TraderLab community, which is a group of like-minded traders who've come together to leverage their collective experience. The idea of the TraderLab is to bring traders together, whether you are new or whether, like our senior trader who's been trading over 50 years, I've been trading 47, both professionally and out here with you. And it's not about how long you've been trading. It's about, can we leverage the experience of this community and together be better? And you're all invited to the TraderLab. Now, I want to remind you, I am streaming from Costa Rica. I'm in a very unstable environment, both from the internet side of it, and I have a failing laptop. So altogether, quite exciting, and as they say, random. So if I drop out, I will recycle things. It takes anywhere from 3 to 5 minutes for all the stuff to get going. And if you're in YouTube, as they say, I will return. It just takes some time for everything to pick up. So be patient. If that happens, guys, I will come back. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss, and it's not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this isn't a trade calling room. If we get into real time, we talk. Also, I got an important announcement for you guys. By the way, my graphics are having a hard time here, so I think things you might say at best are tenuous. There's going to be a special Discord-only event. It's for tomorrow at 1 p.m. Eastern Standard Time. It's going to be on how institutions move markets and how order flow can be integrated into that. So you might want to check that out. Use the link in the bottom of YouTube if you want to register for that. There's no obligation, no cost. You just need to confirm your Discord username so we know you're not spam. And then go to the event calendar and check it out. And of course, you also have access to a lot more trader-oriented education, and it's all available at no cost. So hope you're getting some out of that. Hope you'll take advantage of this. And the thing about Bookmap is not only does it provide top-tier software and order flow tools, it also invests in trader development. That's kind of unique, I think, and it's something I think tells you a little bit about the potential. Because if you're successful, of course, Bookmap is successful also. Now, this is yesterday's abbreviated session. Now, as you guys probably know, we had news about shall we say, Greenland, and based on some of the, call it geopolitical jawboning, the market did not like it. So we had a gap out of this area. This was Friday's close. On Friday, I was before a 3-day weekend, so we knew we could possibly do some squeezing on Friday, and what we ended up with was we found an excess, which was all fine for the longs, but in fact, this was a long. But then we ran out of our buyers. We didn't ever get squeezed as much as it would have been nice to have it squeezed. Doesn't matter. And then we had long liquidation. Then we had the news, and this is what happened yesterday for Martin Luther King Day, where the markets were closed. But the markets do trade up until RTH open. So this was the last reference to the auction or potential valuation. So we fell out of here. And if you guys might remember, we had 23, 21 actually as a target on this day, which set up all the longs. So when we fall out of here, it kind of turns the barge around. So this is the last auction we get to work with. And often I discount these. In other words, I just erase them because it's not a full trading day and the cash market wasn't trading. But because it was event driven, I decided to leave it in and just see how we relate to it today. And that was just a let's see what it looks like kind of moment. Just so you know, there's nothing rigid in trading. You have to always think about what it might mean, not what it does mean. And this is not rigidity. Trading is a fluid event. So let's go take a look. So this is the higher time frame. Now let's just look a little further. Now this is yesterday. Yesterday's high, yesterday's low. This is an outside edge around 68, 70-ish. Outside edge, and you can see it here. And if you remember, I think 68, 70 over here was a long for us. And there's going to be stops under this swing. If we get under here, where's our next key location? It's here. And this is called the microcomposite volume point of control. Basically, what I'm measuring, and this is all subject to you, not me. What do you want to see in the auction? This is where individual plans come in. There's no right or wrong. It's what information do you need to extract. This was the highest volume here. And let's call this the intermediate time frame. This was too low. And you notice how we broke away from it, came back, tested, filled the gap that was here, got shorts in, and then squeezed the shorts out. Market goes up to go down and goes down to go up, goes up to go down. And that's why over here, I was looking for it to go down to go up. And then we, got into our thing over here, and now it's go down to do what? Remember 68.45. Now, let's go to Bookmap. Is everybody tracking so far? How are we doing? Are we conscious? By the way, could you guys post in the TraderLab the link for YouTube? I cannot see YouTube, and I'm watching the TraderLab chat in Discord on my phone. Thanks for posting that. How we doing otherwise, guys? Now, here's a couple important elements, maybe. Let's try it. By the way, if I crash, remember, I have a failing motherboard and an unstable environment here in Costa Rica. By the way, it's kind of hot here. It's about 85 degrees going up to 90. So with a little jungle humidity, it gets a little weird. Here's the first thing I saw. Not the first thing, but I kind of look over the market every day and every moment, watch the progression. But the market is an auction. And if you subscribe, if you will, to a concept that the purpose of the market is to try to figure out what's too high, what's too low, and what's fair, and it does this in all time frames, then I look at all different time frames to try to get a sense of it. Well, this is that key price around 45, and the ETH low checked it. Now, where's that 45? It's here in the ETH. Well, if it's too high, I can then retrace. What do I know then? Well, I know if I come back inside, I've got Monday's abbreviated low. I've got 68.91, high volume over here. I'm in multiple time frames, if you call it that. I've got, here, let me show you something else. I'm going to put a little more information on here. Maybe not. Hold on. Let's see if, okay, I got it. Oops. One moment. Here it is. Sorry. Here. This is yesterday's abbreviated RTH. Call that abbreviated ETH, I should say. RTH. I'm losing my mind here. 69.01. So 69.01 is like the fair price. This is yesterday's low, yesterday's high. So I know if this is too low, I have the potential, underline, to come back to there to check yesterday's low, and then after that, all bets are off. Of course, all bets are off anyway. This is trading. Is everybody tracking so far? So this already shows me the potential, not a prediction. Are you guys with me so far? So this is before the market opens. Now, let's go to the context grid sheet. What are we doing? Well, if yesterday's low is here, abbreviated session again, and this is in the eye of the beholder. The ETH high is up here, and the ETH low tested a key location, and then I open in between somewhere there. Then what do I know? Well, the last auction is the ETH. This is the retail price. Is it going to be too low if I open above it? What do I already know? 45.46 is the ETH low. Is that too low? So I'm opening in a gap. Have I found too low in the ETH? No clue. If I open above here, then I can come down, I can do anything. But if I don't get below here, then, and this is a high probability target, then I have the potential to check out this low. What are those probabilities, Tom? Well, now, here's the thing. Statistics are not rigid. What's the number one element in all this is the behavior, not a statistical probability. But let's start. We're opening lower outside of range. Well, the first statistic that's within, as they say, spitting distance is an 80% probability-ish to go there. Why would we go there? Because it's the retail price from the last auction, the ETH. But what about filling this gap from Monday? Isn't this a conflict? Well, it's the last auction. And getting to the previous high or low has a 68% probability. That's better than 50-50. But what else? The market fell out of bed. Now, let's use some common sense here. If we have a fundamental input, which is news, and the market gaps from the weekend, gaps out of balance, then what about those who are still long? What might they do today? Continuation selling. If we get continuation selling, what are the possibilities? We keep going down, of course, but then there's another piece, and I always talk about this in TraderLab. This is understanding market mechanics, and this is something you need to understand, in my opinion, in order to develop edge. And nothing is predictable, but behavior repeats. Remember, you can't predict it, but you can learn and understand it. If traders or investors are currently long in the market, they get news over the weekend, they want to sell their mutual funds, ETFs, or anything else that is somewhat or stocks, and they don't have that opportunity on a national holiday, when would they do it? Wouldn't they do it on the open today? See? So if we understand that there will be some of that behavior, doesn't that suggest to us a couple possibilities? One is we open lower, we go lower. And then if we can't go lower, we squeeze and we get shorts in here. And if we trap shorts, doesn't that suggest to you we can squeeze? Does it? It does for me. And I can't tell you what it will do. It's not my job. But my job is to understand retail trader or investor behavior. And that is, they're typically out of alignment. They come late to the party. They buy the highs. They sell the lows because they respond emotionally. They don't understand market mechanics. Is this making some sense? And by the way, that doesn't tell you anything other than in your trade plan, you would have if this, then that. If not, then what? If this happens, then that. If it doesn't happen, what does it mean? That's all it is. And now the other piece is, what about news? Well, we had news over the weekend. What do you do about that news? Do you anticipate the behavior? And there's another piece of news. There's news that there might be a ruling on tariffs from the Supreme Court, which can come anytime. And we had an interesting conversation. Does that mean you don't trade because news may come? That's always an individual choice based on your plan. My plan, I always understand there's news. there's reports, there's randomness, there's events. I've traded through the 87 market crash, 9/11, currency crises, and a lot more. And there's things you don't know. So in trading, we always have risk, and no matter what it is, there's always headline risk. And when we know a report is coming, like a scheduled report, we're going to see that behavior. When an outlier event happens, it just happens. So this is where your individual trade plan that you have vetted really tells you what to do. Traders are traders. I trade everything. And I only do it because I have an edge. And yes, I take stops whether there's a news input or not. It's just the nature of the business. But everybody decides for themselves where their edge is and can they manage their risk. And that's your plan. And it shouldn't be my plan. TraderLab's about you. It's not about me. So let's take a look now. Remember what we know. This has over an 80% probability. It's the last retail price. We have yesterday's abbreviated session low, high probability to get there. We have an outside edge from the ETH, which was a low volume node, which is just where the market fell from. So we have that. We have what did we have? Too low possibly. We checked the key location in the ETH, no clue. We have over 90% probability to take out ETH high-low. In fact, it's kind of more like, about 90%. And taking out the first hour's high or low, 98%. Anything can happen. Are you guys with me so far? So coming in, first trades for me are shorts, then longs. And then after that, or even during that, clueless. This is the logic of a trade plan. It is not a prediction. This is trading. Don't you wish? This is not a business of being right. This is a business of knowing what you'll do before it shows up. If you don't know what you're doing, then you're gambling. Because we can't know what the market's going to do. We have to know what we're going to do. We have to have practice enough and vetted that when it shows up, we show up. And then the outcome is random. That's it. No matter what. Okay, let's go. And this is TraderLab. The idea of the TraderLab, so you understand, is that you understand what this business is, not the fantasy of just what it is. And then you craft an operational plan to operate in this environment. And this is an environment of risk, not being right. You're exchanging risk for opportunity for outsized yield. It's no different than any other business. Risk, reward. You go to a candy store, they sell a candy and make 10 cents or 5 cents on it. This is any other store. Except in our store, we want to buy on sale and we want to sell high. Buy low, sell high, or sell high, buy low, and try to stay out of the middle. So this is the RTH Open. So the first trades for me, and these are not recommendations, I'm just giving you a sense of time frames, market mechanics. Everybody finds their own groove. Okay? How are we doing in the YouTube? I hope you're doing all right. I can't see your questions because of technical problems here. You can use the links in the bottom of YouTube if you want to visit TraderLab community. There's no cost. You won't be solicited, but you can become part of a really great community of serious traders. It's not romper room, and I'm sure you've all experienced that. This is about the business of trading. It's a leveraged community. There's data mining. There's a library of webinars. By the way, Ned, thanks for curating that. A document section, and of course, all the contributions of the individual participants, which makes us all better. So, first trade I'm looking for, I have over an 80% probability to get here because this is the high volume from the ETH. I have resting liquidity sitting up here, which has been in the book before the RTH Open. This is how order flow might contribute. You have to learn about order flow. It's not a line on a chart and you do something. It's what it means, where it is, and where is this? Yesterday's low is a gap. Overnight mid has a high probability. It's about 68% also. and I have over 80% probability to go there. So my first orientation, remember, top of the stream, is to get late sellers in the market who want to get out because of, quote, the news. And what typically happens, and when I'm going to say typical, I have to, kind of give you some flavor on that, what often happens, because anything can happen, but you always have to kind of think about human behavior and psychology and why most retail traders don't succeed, whether it's in the stock market if they try to time it, or even here. So we want to think about it. I have this liquidity resting in the book. I have a gap here, and I have over an 80% probability there. So now I'm going to be looking for my first trades. What am I looking for? Late sellers. And what happens to late sellers? They become buyers. Not intentionally, because they're going to have their buy stops over the swings. So let's try to see if we can find a short here. So I'm looking for the short. I don't know. Now let's look. My first suggestion of a short is right here. Now, it doesn't mean get short. It's a suggestion. Overnight bid. This is called VPOC. Sorry. Things seem a little out of whack, maybe. Let me look here. I have crashed a couple times here. I can't tell now if these are accurate or not. I can't tell. So this might not be accurate here. This is accurate. This is my developing volume point of control. I need it to be accurate. I'm assuming, since the volume is here, that this is accurate up here. Let's mark it. I call it a variable high volume node. I'm having graphics problems here, guys. It's very slow. It can crash at any moment. Remember, if I crash, it'll take me a couple of minutes to get reset and download a little data. I will come back. I have a sweep here. This sweep suggests higher. It's not a down rotation. Let's just see. This suggests an up rotation. This suggests maybe there's support here. There's my buyers. I have buyers here. There was absorption here. And there was, let me just see if I'm in the right place here. Absorption over here. Let's just see what it does now. Liquidity here. Sellers are here. Let's just watch. Buyers are here. Buyers are here. I have this liquidity. I have the gap over here, and I have 80% probability of down here. Okay? Okay, let's watch now. Watch. Now, here's our liquidity. This, actually, I read this as a short, but this is not a trade anybody ought to take. When we come back up here, this is really where, for me, I saw this as a legitimate first short. And this is in the opening swing, so it's not a good trade for most traders. This suggests the upside rotation, and nobody knows. Don't forget, this is the target. Then we come back. So what do I know here? I know I've got my sellers here, and there was the reaction. So when we come back up, I'm looking at this, and you see it start thickening up. This is how order flow can help you. Now, I know I have yesterday's low, and it would not be unreasonable to test this and then break down. So these are areas I'm looking for initial shorts. And remember the rationale. Late sellers, get me out of here. It's going to zero. This is how retail traders typically think. And they may be right. It's not right, wrong, remember? So let's look. This is my resistance. Now, there's another thing here about this. Right here, what is this? is this a double top or did we one ticket? If so, this is not a strong high. This is what you want to be leaning against. If you take a short in here, your stop's got to be above here. Just saying. And you're going to get stopped out, of course. There's the test of yesterday's low. This sets up a short here or here, if it's in your plan. And these are aggressive. I always suggest to traders, don't even think about it. Just follow. If you took this, you get scaled. This is your support right here, right there. And why? Let's look at it. Microstructure. You have absorption, a sweep. And right here is where your buyers are. So this, if we come down, is your support. There's microstructure. So if you took a short here with a stop over here, you're looking for this, and then you're looking for overnight VPOC. Okay? If you micromanage, this is a weak high, by the way, because of that. So again, if you sell this, you're going there as a target. Stop has to be outside. You get taken out because you micromanage, but this is your resistance. You sell it here, there's absorption there, there's the liquidity, it's another short. Where you're trying to go? You're still trying to go here, you see? Now you get taken out. Where is the next location? It's here, 67% probability. Now this may not be your thing, I get it. Not saying it should be. Let's watch. This is a sweep. This and the liquidity. This is a short. Very aggressive stuff, guys. You're going for this. Here. There. Okay. So these may not be your trades. I'm not saying there should be. These might be part of the trades you develop in TraderLab or none of them. But these are more advanced and there's a lot of volatility. It may not be your place to trade. It's I'm just showing you what you can learn. But the other part of this is the idea of learning is to know where you don't have a trade, but to begin to develop an understanding of what you're looking at and why. So it's kind of a walk before you run. This sweep sets up the short. Look at this sweep here. Watch. Just watch. So if this is too high and I have this sweep, I can get the counter rotation. Then I have to watch what happens in here. The target is this, okay? My data went down here, so I can't tell you about this because I couldn't see it. I should say my computer went to south. Data crashed. This is part of the problems of having a failing motherboard here and here. So let's look here. So now we have yesterday's range. If we get into yesterday's range, it sets up this, which is yesterday's retail price. Let me come back and show you where the level comes from. Maybe. This price here, 6,900, 6,901, was the highest volume in here yesterday. Think of it like our retail price. The overnight volume point of control is the highest volume from the ETH, which is down here someplace. It's the retail price from the last auction. If we find too low and we get inside this yesterday's range, then we can come here and go wherever. The wherever is the unknown, naturally. And let's go take a look and see where we've gone so far. ETH low, right? Down here, maybe too low. Come back, get the ETH volume point of control, too low. What's the last location that was too high? Right there, that's a target. This is how the auction can help you. Getting nasty over here, guys. We got to look out. Remember, if I crash, I will try to come back. So this is the next target up here. There was another trade in here someplace that I was talking about in TraderLab. I took a stop. I think it's right here, as a matter of fact. Let me show it to you. If we think we might, this is called the potential mean reversion trade. This is how this works. If we think the trend is up, maybe at the moment in this developing time frame, and we're inside of the previous session's range, and we pull outside, there's a possibility that if we come outside and there's resting liquidity here, that if we test this, we can take a long and scale at the IB high and then look to continue back up. That's a mean reversion trade. And 90 is the level. So right here is the long, okay? And I want to point it out to you because it's a trade. I don't call trades, but it's a trade that fired. So this, let me show you how it works. And this one took a stop, but it's very important you understand. I mean, all trades have the opportunity for profit or loss. So it's in our business, this is not a be right business. This is a follow plan business. So when we pull outside here, we have the mid, we have the VWAP below us, which we have to be conscious of. But in the auction, this is the outside edge. So out in here, so the alignment is with the liquidity. So this is a long. Let me show you. Here, I'll show you the trigger. So we break below. This is resistance right here. This is a structured trade. What I get here is buyers are here because there's sellers, and notice the liquidity comes in here to support, in my opinion at the time, not saying it's right, I'm testing the range of yesterday, so I'm outside. So for me, this has all the components or elements for a long for continuation. So this is where the trigger sets up. So buyers are here, buyers are here. Let's look at the change in the delta. It's interacting with order flow. So I've got less sellers. My buyers are taking control here. Less buyers, teeth chatter, suspect, and this. As soon as I break above this, this is a long for me. Not saying it's anything more than what it is. And then it becomes a stop, okay? Now we're below this. This is now resistance. I'm falling outside of this low volume area. I have stops over here, mid, VWAP, and it is falling out of structure. But I'm still inside of yesterday's range. So it's sort of a suspect. Resistances here, and the buyers are in here, and that's that. Let's see what it does. Break high, pull back. We get to resistance here. So this in here, I have nothing to do. I'm looking at this and I'm going, I don't know. That's me. And of course, I never know, but I don't have a trade. So I don't have anything here. That is structured. Now, if you're strictly an order flow trader, there's some other possibilities, but that's much more advanced. And it's really not part of what I do here in the stream. This is your resistance. See it? See it thicken up? This will skew the book. So let's watch. Notice where we come. Now, right here, where's our resistance? It's here. This might be too high. It's the retail price from yesterday. This is the range from yesterday. This is the mid in the VWAP, and the volume point of control is below us. For me, I got to tell you, I'm in chop, and I'm looking at this, and I came out here, and now I'm coming out here. If this was really going to go anywhere at the moment, it would most likely not be getting under here. Let's just see what it looks like. I haven't seen this, so I have no clue. Yeah. this now is a location to discuss. This is called, this is something I made up many years ago. Can't say it's good, bad, or indifferent, but it's worked for me really well. It's kind of a way to, if you want to think of the auction as shopping, in other words, what's a fair price? And the purpose of the market or the auction is to figure out what's too high, what's too low. Then we want to try to determine that behavior, and can we codify it in some fashion where we can dance with it? In other words, recognize it and then develop trades for it. So if this is too low, this yellow line's the highest developing volume, and it moves up here because there's more transactions up here. Think about your store. More volume is a retail price. Well, if this was the previous fair price and now they raise the price, is it possible when we come down here after it's shifted up that we can revert back to there? That's all this is. So this becomes reversion. So if we can revert back to this price, think of this store, and if it's too low, I can then come back here. If I come back here, I can also possibly come out the top or stay in this range. Let me show you another trade, by the way, I forgot about. We have a couple trades in TraderLab. Now I don't have my data here, so I can't say much about it. At 9:30 Central Time, we have two trades that can show up here. One is called the IB continuation trade, and that is that the first hour's high or low, remember there's a statistic that there's a 98% probability we'll take out the first hour's high or low. Given the context, potentially it's going to be the first hour's high. So if we're going to take out the first hour's high, if you are on the long side, you can aim towards it. And this is the IB high, first hour's high. This is a target from yesterday. And the statistic for that, let me find it for you. Maybe. I say maybe because I can't find it. Well, 30%. Hold on. Okay. Can you guys still hear me, by the way? Have a little trouble here at the moment. So this right here is your sweep, just a piece, location, break. So the IBC, so you understand, is a condition in a trending configuration. The issue I have with that trade, even though we're outside the previous day's range, is this is a primary target. So if I'm long, I'm not going to take a trade here because I got this. And now I get a sweep. What does the sweep suggest to me? The possibility for counter rotation. That's what it tells me. Where's my resistance? It's here. So the IBC doesn't work for me, and the IBF doesn't work for me. So for me, the IBF, and the reason the IBF is a problem is because I've already got my shorts trapped, you see. So I think you could take the IBF, and this is the only thing that gives you the IBF is this. That, the break, the location, the test, the short, and this is where you got to get scaled, the potential to come here, VHVN. So you're really trading this to that. If it's not your trade, you just sit back. This is really more advanced reversion trading. When you're learning reversion, you want to keep this very simple. You want to look at the primary pieces. You don't want to be trading this. I'm going to say, unless you really got your stuff down and you can read it and think about it in multiple time frames. Yesterday, abbreviated session, fair price. Today, excess I'm sorry, fair price. Sellers are here, and this is pressure in the book. This is the last place where we had buyers. This sweep suggests counter rotation. This sweep suggests down. This sweep suggests up. This sweep suggests down rotation. It doesn't say reversal. It says potentially rotation. See it? So depending on your plan and how you manage your trades, you can incorporate these processes into a trade plan. But my suggestion to developing traders is trade less, more range. Less trading, less risk. More range, better risk reward. I always talk about this in TraderLab. Many developing intraday traders think this is a video game and that you take more trades, you can actually net more. You have to keep statistics, and I suggest you will find out as a developing trader that more risk is more losses. That's all I can tell you about that. How we doing, guys? If you're in YouTube, please give a like. You might not like that I can't see your questions. That should be resolved when I get back to Chicago, which will be in about 2 weeks. And then I'll have to replace this laptop, among other things that I have to do when I get back. But hopefully I will have a stable situation. And Bookmap support, thanks for, it's like somebody riding shotgun for you. And this computer's taking pot shots because it's just randomly, it's beyond crashing. I'm just going to say crashing would be a pleasant experience. This doesn't crash. This just dies. Very different than a crash. No blue screen, no nothing. Just, we're out of here. So let's look at this. What creates structure? Sweep. Now here's a sweep, Tom. Why didn't you go get short there? I don't have a location. You don't? Why not? Well, this. If I know this because of the auction, that this was the fair price and yesterday's low was here, if I get into yesterday's range, what's the possibility? Come back to the fair price, highest volume, back in the supermarket. And if it's too high, what might happen? I'm out of here. All right. How might I trade this? This is the sweep. This is the bobulation right here. Auction. Sellers are there. Break low. Trigger. Where am I? IB. This sets up a short if it's in your plan. Too high. This is called the IB failure. The caution is here on the VPOC migration. There's another way to do this. So there's a short here. Sweep here. Potential to squeeze, but you get the order flow. This is a skew of the book. This trade fails over this high or over this liquidity, and then you're trying to come to the mid and the VWAP, and then down here, and then wherever. Structured trade. This right here, when we break high, this is a concern. It needs to stay below this. When it breaks low, it sets this up. This is the next location. And let's look at the language. This is a language. Too high in the microstructure. You can see it there. That is reversion. So when I break below this high volume right here, that in a shorter time frame is the same as that, which is a developing daily time frame, high volume. When I go up, this is the new retail price. But what is always happening? If this is too high over here, because I've got my sellers, and I come back and check it, and there's sellers here, that's what's happening. Why? I got a green delta, but if it doesn't go up, it means my sellers are here. And look how you put it together. There's the pressure. The delta is here, absorption, and skew of the book. break low. So where's my stops? Under here. Where's my VWAP in mid? What's under here? Stops. What was this? Too low. Let's see. Too low. What's this? Too high. So what do you got? Too low, too high. Who's going to win? Wouldn't you like to know? Me too. So what do? You take your trades. So this is the IBF. And everyone's going to say, well, why not the IB continuation trade? Because of the target. If I'm taking the IB continuation trade, I need a target. I already got this one. This is the return to check the fair price above. If it's still too high, where might I go? Back here. And if I can't get above this, where might I go? Back here. If I get down below there, where might I go? Let's look further along the yellow brick road. The possibility, not predictability, exists to come out the low of the day. And, whether it does or not is not my job. My job is to align, to manage. Now, this buying is pretty good, isn't it? Now, remember what the thesis was for today. Early sellers, trap the sellers, squeeze the late sellers, right? Market goes up to go down, market goes down to go up. What have we done? Market went down to squeeze, goes up, potentially go down. So what happens is market mechanics 101. You can learn this in TraderLab. Get those sellers, squeeze them out. Get buyers, what happens to them? Take them out. Where's my support? It's really there. If I get below that, what do I have? Stops under here. This also set up the long if you have a location for it. So the possibility is we already found too low and we're just going to rotate around and abuse everybody. And one of the things that's really important to remember, what we did in the ETH, we found too low, you see. Now we have over 90% probability to take out either the ETH high or low, right? ETH high, ETH low. Which one is it going to be? By the way, it's not 100%. If this is too low, then maybe we can come back and get here. Or in the meantime, what do? We take our structured trades, if you're in TraderLab, and you put your helmet on. This sets up the short, IBF. I think I was getting a question about the IBF. Okay. Yeah, bobulation. Yeah, that's it, repeat. The bobulation trade. So Athene, yes, I would take the IBF in this configuration. And it all goes back to what happened in the ETH, because that's my latest auction and what it did. There. This is how the auction works. This is a key price from the last time I was down here. And that's there. And it's based on what happened here. This was too low. And this whole up move came out of here. Okay? I know there is demand here. So if the ETH comes down here and I reverse from it, maybe it's still too low. I don't know. And what do I know from yesterday? This was the retail price. If I look at the logic, if I open below it, I get into this range from yesterday, then what's next on the hit parade? That's what I know. And do I know what else? No, I don't know. It's not my job to know because I can't know. But what I do know, this is an outside edge. And this might be too low. So it's shorts to trap, longs to squeeze, target up here. Then if longs are in here and I'm rotational, I can sell for the IBF to take out the longs. I trade the market mechanics. If I go to higher time frame, let's look at the higher time frame, how this works. Shorts are in here. What happens to the shorts? They get squeezed. What happens to the longs? They go under the bus. What happens to the shorts? They get squeezed. What happens to the longs? Under the bus. What happens to the shorts? They get squeezed. What happens to the longs? Under the bus. What happens to the shorts? They get squeezed. What happens to the longs? Under the bus. What happens to the shorts? Having a good time. What happens to the shorts? Well, in here, they're having a good time. What about the late shorts in here? They get squeezed. What about the longs in here? Maybe abused. What happened to the shorts who sold in the ETH down to here? Sorry, Charlie. You heard of Charlie the tuna? This is the market mechanics. Now, when we go down in time frame, nothing changes. It's rotations. What I'm sharing with you is a way to understand how the market works. Now you take this mechanic, if you will, or behavior, which is time frame oriented, and extrapolate it. Market goes up to go down. Market goes down to go up. Market goes up to go down. All time frames, you see? So what I'm doing is the same process, and then I'm using the auction in different, quote, time frames, but there's no time here. It's just behavior to participate. And then I'm following a plan, and when the trades don't work, just like everybody else, I'll take a stop, and I don't really sweat it. I don't like it because of my emotional attachment, but that has nothing to do with the business, you know. How we feel is just primal wiring, you know. If we're trying to get food for the winter in the cave, if the whatever it is we're trapping gets away, we have a sense of loss. On the other side, we don't want to take risk. Is there a saber-toothed tiger there? Because our instincts say that's not good either if you get eaten. So when you're sitting in an environment of complete randomness and unknown, everything is triggered right here. All your fear and your greed is here. And our nature is to look for certainty. I have to remind you of this. It doesn't exist here. And in fact, when you're a hunter out on the tundra, there was no certainty. There wasn't a woolly mammoth around the corner or a saber-toothed tiger. So we were always fearful. Well, we're fearful here because our wiring, our primal instinct, you know, we talk about instinct, right? Well, instinct is primal. So our instinct, that triggering is fear. So our triggering is protecting us. And I had to work very hard as I was developing as a trader. Yeah, everybody gets abused, JJ. Abuse is randomness. So we're not victims here. We're operating in randomness. I want to talk to you just a little bit about the psychological impediments to sustainability. For many years, and I want to stress the term years, I've been trading 47 years this year, professionally and otherwise. So I went through everything you guys do. No different. We're all human, right? We all have the same issues. We don't understand where they come from or how strong they are. This primal behavior has helped us as a species survive. It is not in alignment with this behavior. It recognizes unknowns as an equal threat to a saber-toothed tiger. No differentiation, and no matter what your conscious mind dictates, it overwhelms it. That's why you cannot act in your own best interest in this environment. Instead, you look for certainty. This behavior or this primal wiring, and I call it Hyde, Jekyll and Hyde. Hyde's the lunatic. Hyde is not in alignment with risk. Hyde looks for certainty. So that's why we avoid taking a trade when we are uncertain, which would be right here, right? And it's not a trade. I'm just saying it's uncertain. So if it was a trade, you're going to look for confirmation. Why is that? Is that in your best interest, or is that in Hyde's best interest? Think about it. So Hyde wants you to avoid risk because that's its mission. And I found for me, I tried to overwhelm Hyde. In other words, behavior modification. I'm not going to feel these emotions. And I thought, and I mean years worth of, works on my dog. I figured it would work on me. No, it didn't work. So you'll notice how your dog chases a squirrel or a bird or cat or whatever it is, primal wiring. They don't make choices unless you can modify that behavior. Well, I tried it on me because I thought kind of it's the same thing. It didn't work. So instead, I had to understand this mechanism and instead let it kind of wash over me. In other words, anticipate it, not be surprised by it. So when I'm coming down to take maybe a long here, which is not a recommendation, and I have a sweep and I have a location, and then my idea might be to come back here, which is not anything. I'm not saying it's a trade. I'm just saying is my fear would supersede what might be a trade. This is not. I'm just saying it might be. So let's say it was. What am I going to do? Well, my fear is now driving the boat. If I put this trade on, and remember, it's not a recommendation. I'm just giving you an example. And instead, I want to be sure, and I wait for this with the idea of going there. What has changed between putting the risk on here and putting the risk on there? There's only one thing that's changed. The uncertainty and randomness still exists, but what I've done is I've doubled my risk and lowered my potential reward, but I have not changed the probability of the outcome. Which one of those makes more sense as a trader, do you think? Certainty with more risk, equal opportunity for outcome, or less risk, less dollar risk, same outcome risk in a random environment? Does that make sense? This is the elements that we have to learn about. And then we have to make choices, what we do about it. Because you're going to find, and you do need to keep metrics, you will find that for the times you wait for certainty, you're not going to be more certain over a large sample size. Your risk is going to go up. And you're going to find that for those times that you look for certainty, I'm going to suggest, and you have to vet this for yourself, that your outcome is going to be worse by waiting versus minimum risk, maximum uncertainty with better trade management. But you have to vet this. See, these aren't recommended. And this is not a trader. This is just an example. Okay? Because what do we know? What do we know? We know this is too high. We know our sellers are here. We know we broke. And now what was too high is too high. This is the last place that was too low. So what is this? It's potential rotation, or the longs. Remember what the or is. Or if we get below here, we can fall out the bottom, and then we have something called a neutral day, which is two-sided trade, and the market's just kind of swimming in the middle. That's what I know. I don't know anything else, and I don't need to know anything else. So if I'm taking a short or a long exit up here, I can be done with the longs. I can be short from here. IBF, right back at you. See the IBF, too high, to where? Down to here. Then what? Wear a helmet. Then what? Trade management. Or you could be done with it here. Return to balance. If this stays too high, and this, of course, is too high, and I get below here, then the next place on the hit parade would be to take the longs out. That's all I can tell you. I can't tell you what it'll do. And I never tried to think about what it'll do because I have no idea. So I'm not in the prediction business. I always say I'm not in the prediction business because I can't predict. So what I do is I'm in the alignment business. I know this is important. I know I have a sweep. Now I'm looking to see what happens here. What else do I know? I have stops under here. So I might here, I might take this out, take out the longs. Equal opportunity for everybody to get abused. That's trading. Does that make sense? How we doing? Please give a like if you're visiting in YouTube, and use the link in the bottom of YouTube if you want to visit the TraderLab community. There's no cost for it. I only have to say it's about the business of trading. There's a lot of great contributions going on in there. Data mining, research, what goes on in TraderLab, what I share is based on my experience as a professional trader, money manager, and now a retail trader out with you. This is about the business of trading and the reality of trading and sustainability. Trading is not a video game. You can have a lot of fun, but video games I think are better. Or go to the casinos, get the cocktails, the ticket to the buffet, and you're going for entertainment. This is a business, and it can be a really neat business. I'm in Costa Rica for a few months, notwithstanding a problem I have with a laptop, which is a whole different conversation. I was a month in Mexico. I've traded from Spain. I go wherever I go. Bangkok was rough, 12-hour time zone difference. You don't want to necessarily do that. But other than that, you can go anywhere on the planet pretty much if you're in a workable time zone and work. So it's a great business, and you can become now with the technology, you can be a digital nomad. When I started in 1980, I was trying to trade remotely in the mid-1980s using a modem. And actually, I did. And that was no piece of cake either. So I'm just giving you an idea. All things are possible, though difficult, depending on the technology. Today, not a big deal. How we doing? And if you're interested in TraderLab and the Bookmap ecosystem, Bookmap, so you understand, the Bookmap server is about trader development, and there's no cost for it. There's a lot of education, stocks, options, crypto, order flow, of course, with a high-tier tool like Bookmap, options, option mechanics, market maker behavior, algo behavior, and a lot more. The order flow is really important. The thing about order flow is it's kind of like a look behind the financial curtain. The individual participant behavior and if I crash, by the way, guys, this laptop can't handle this. In fact, I'm not going to open as much as I wanted to show you nanosecond behavior, but that's really asking too much at the moment. So where are we trying to go? Neutral day. Now, that's not a recommendation, but what is this neutral day thing? A neutral day is where you take out the first hour's high and low. What is the trend? Up or down? Well, let's come back to today's premise. This is what having a trade plan is about. What was today's premise? Negative behavior, the Greenland thing, geopolitics, and putting aside whatever your opinion is on all of that. What does it do? The market does not like uncertainty, and you're going to get long liquidation. The longs that liquidate on yesterday are now in the market, and then you have continuation selling today for those who aren't. They can get out. Logic. Think of the logic. You get the early sellers, which are the long liquidators and new shorts coming in. Then we turn around and squeeze out the shorts from this morning and some of the shorts from yesterday. If we come up to the retail price from yesterday and it's too high and we squeeze and we run out of buyers, what does that do for us if we understand market mechanics and order flow? It says, I'm not paying that. And this is your trigger. There. This is a short. Back to the micro high volume structure. You want to get risk neutral. You're trying to come here. Come on back. This liquidity thickens in the book. Your stop would be here. Breaks down. If it pulls back, where's your high volume structure? Take a look to the right, that little node and where the crosshair is. This is resistance. You would learn this in TraderLab. Doesn't mean you don't take a stop. We haven't figured that one out yet, so not trying. Liquidity, pressure, resistance, short, where are you trying to go? Back here. And then once we break here, resistance, stops, resistance, counter rotation, short. short to there, still short. These are structured trades you can learn in TraderLab. Now, the other part about this is you don't have to be doing any of this, of course. You find your own tempo, your own rotations, your own rules for you, and you have to vet them. Where's our next location? It's here. Okay. Right there. Bang. I don't know if I have a VHV in here, guys. Can you confirm that 68-ish? Because this is where I had my buyers. I suspect this is my next target coming down, and there's micro high volume right here. So I can come out to this low volume area. I believe 69, this would be my next area. Guys, can you confirm that? By the way, I always get the question about how to slice and dice the market up. I'm going to give you my answer, and there's no correct answer. This is the joy of all this. What time frame are you operating, and what information do you need to operate in the specific rotations? So if I go to a higher time frame, if you will, investor RT, I'm going to slice this up to extract the information that is most recent to the area I am trading, and that is this. ETH low came over here. So I already know what happened here. My buyers were here. This was too low. If it was too low here and it's too low in the ETH, that gives me information that this might be too low. That doesn't take away that I can take out the longs that are in here and come out and then maybe come back to here or wherever it goes, it goes. You know, that part, not material to me, you see. Does that make sense? So you have to slice this up to see the information. And for me, it's where am I trading? And I typically look at swings. So for me, it was this low to that high, and I wanted to see what was in between. It was this low up here to see what was in between. Once this came under here, this one is gone, and then this one is still here. If I get below this low, I'm relating to this one. And again, it's all in the eye of the beholder. I've always gotten, questions about it, and I have to tell you, the answer's your answer. Everybody is different, but there's nothing that's rigid in trading. You have to find what speaks to you. So this, guys, was too low. Remember, this was the retail price from the ETH. If it's too low, where was the last place it was too high? It's right there. This is all auction based. That's why what you had was the RTH open, wherever that was, somewhere, which sets up the shorts down to the overnight VPOC, which sets up the longs, back to here, what sets up the shorts, back to where the buyers took control. You could be out of your short here, or you have a runner for this. Because why? There's sell stops under there. What does the market do? Market goes down to go up to go down, goes down to go up. And in this case, maybe just down. I don't know. Do you care? I don't care. I hope this is making some sense. Remember, guys, trading isn't prediction, it's alignment. So in the ETH, if I know, and I say I know, because I do know, not what'll happen, but if I know the ETH low is at a key location, what does that tell me? It tells me if I get additional sellers, I may not come back here. And that possibility is I can squeeze up. But if I can't get over this naked volume point of control, I can stay in here. And what it does, you know. It doesn't give me the ability to predict. So since I know I don't know, and my buyers were here, would it be reasonable to just come back to where the buyers took control and exit a short from there, 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 to there? This is a structured trade. TraderLab. Hope you're getting something out of this, guys. Please give a like if you're visiting in YouTube. Remember, I can't see. Ragnar, I trade on screen through Bookmap because I can execute right here with the pointer. So I can just, what I can do is I can open this thing up, and if I have a trigger like what this is, or might be or isn't, I don't know, it's not anything, I can just, boom, pop an order right there and then look for it to rotate. If that's my trade, which is neither here nor there. So yeah, I trade on chart in Bookmap. I can't trade right now because I have a crashing computer. Otherwise, I trade when I'm in Costa Rica. I trade wherever I am, and I make a point wherever I go to be in the most stable environment possible. Costa Rica has always been a little squirrely. Monkeys swing on the vine here, and internet can drop, come back. Power goes off, internet goes out. And now I have a laptop, so I have not been able to trade. I've traded a bit, but no, I'm not trading here because of the instability. It doesn't matter. You know, I don't need to trade here. So, but typically I trade wherever I am. I mean, it's like going to work. I mean, I think if trading off Bookmap is really great. And there's bracket orders you can set up. I use brackets, OCOs really, in the trader control panel. With looks like this, and you can just set it up, turn it on. I don't know. Let's see what's on here. So bracket orders, so you put a limit in, it puts your stop in, it puts a limit exit in, and then you can grab them and just drag them around. Here, I'll show you. Try to show you. So there's no trade here, but let's here's this. So this is not a trade. I'm just showing you how this thing works. So there it is, and there's your limit. You can just grab them. I don't want to crash the computer. If I drop out, see, it's really having a hard time. So you can grab them, move them around, do whatever you want to do. Trade market or trade whatever you want to do. I think this thing, doesn't matter what I do. But look at the behavior here, how it interacts with the order flow. Isn't that interesting? Now here, there's sellers because of the absorption. So now when we come down, you'd want to see what happens coming down here. Anyway, neither here nor there. And it's pretty cool, And there's also, you can do replays with Bookmap, and there's even a, what is it? A setup. I don't know if you know about this, but somewhere in here. I don't want to turn more stuff on, but there's a thing where you could have your setups and you could open it. And if there's rules, like 1, 2, 3, 4, 5, what does it have to be to qualify? And then you can record these things, and you can, at the end of the day, you can see what your P&L was based on the trades. You can export it and manipulate it. There's a lot of stuff here. Yeah, Tom Baum, I just want to see, I combine the RTH to see the behavior that it relates to where I'm currently trading. So if something that's really high time frame doesn't mean it's not material to me. This is what's material. This, because this is the last auction, it was yesterday. Then the ETH, which is prior to today, and that has the ETH low down here, which is an important element. Then my understanding of market mechanics is, because of this is a geopolitical event, that we may want, we may open lower, squeeze those early sellers, squeeze them, and then when we come up here, if this is too high, get short again and then look to take the longs out. You see, it goes up to go down. Then I'm looking over here because this is what I'm trading now. If I come under here, I'm falling out of this whole distribution. So think about what we did. ETH low came outside, and then we came back in. So when I'm in here, I'm working this. If I come out here, which is on the plan, I'm now working back down towards this again. That's it. And maybe here, this is all open. So if I get below here, I'm going here. I'm not suggesting today or ever. This is what I'm trading. I'm trading this. So I don't need to like do some huge composite. I don't need this either because this is the more current behavior. So I can change this. But this over here is all the volume ever that's been up here since January 2022. So, we haven't been up here. And it's right here. What this is right here is an outside edge in the highest time frame. And we trade it all up here. If I get below this was the last area for the longs for me, which was long, 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 out here, long, trouble, we're out of here, under here, changes it. And if we can't recapture this, then we're going to turn the Queen Mary around and be pointing primarily in a different direction. Not a recommendation, it's all time frame specific. And remember, we trade two sides here as day traders. That's why it was short, long, short. Or just short. What's your time frame? If you're depending on your time frame, you could just be waiting for shorts up here, or you're in a shorter time frame, or more micro. What is it? If I'm under here, now I'm looking to take out this low. And now I have to see how far down do I go before either I come back in and balance out or not. So that's sort of the drift here. And right now, this is the highest volume. This here was yesterday's highest volume. If it's too high, I leave it. If the current high volume is too high, I leave it. What is going on? Too high, too high. Coming out the first hour's low, hasta la vista. Where's my next area? Here, and maybe not. Like we do have a high probability of ETH high low. If I get under here, I'm looking at this. Not a recommendation. It's just the way the structure plays out. So if you're in TraderLab, you just be getting aligned and following your plan and taking your stops with the rest of us. Let me give you a little more. What was too low? Wasn't it this? If I break under here, then my possibility is if I get below here, I can sell this, and I've got this. Or I'm selling this, or I'm short from up here, which was the last trades, right? Let's look. Where are they? All these are shorts up here in TraderLab. So that's it. This is a scale. It could be a long if you're trading longs. This is resistance. This is a short. This is a short. This is a target. This says counter rotation. For me, not a long, but up to you. I'm under the IB. I've fallen out of this. Hasta la vista, Tom. Thanks for playing. I get a coupon to the buffet. Resistance is where? Right there. That's a TraderLab order flow trigger short. Aligned with that. These are shorts in the TraderLab. You could learn this. Not saying it's any good. It's just a trade. But you can, if you understand the mechanics, in other words, how this thing works, how the market works, you would understand this is a short. Isn't that right, TraderLab? Is this a short? Did you guys see it? So, thanks, Rob. See, the thing about trading, guys, is anticipating, not predicting. So if I anticipate, I got buyers here, there's the liquidity, and now I get the sweep and I'm looking for this, and I get this. Isn't that a change? So where did these buyers fail? There. If I come up here, this is a structured short for me. Right here. Up against this. Right here. So if I get a trigger here, I can sell it here, and my stop can go above this. And then I got to get risk neutral. But where's my stops? It's under here. So if I get short, my longs are getting liquidated. I'm going for this. And then after that, I don't know. I don't know anyway. It's not about knowing. See? Where am I trying to go? Well, you do remember the statistic. 91% probability taking out either the ETH high or low. I don't know about you. What do you think? This is the TraderLab. These are statistics. Well, Ragnar, it's not just the VHVN. It's what you see happening above it and what's not happening. If this, then that. If not, then what? Then that. This is support because of that. This is resistance because of that. If this is too high, now I know what's too low and I get my buyers. But I also have the IBF, which is a structured trade. So I have shorts, if that's my plan, shorts, scale. Looking for the reversal here. No bueno, break low. What is that? Short, there, or here, depending on your skill set. Then what? Sell stops under the IB. Then what? Over 90% probability to go here. And if we keep going, there. Not a recommendation. It's just the way the auction lays out. So yes, but what we do in our trade plan, not predict, we align. And I'm always going to say that to developing traders. This is not a be right, I knew what was going to happen business. You really need to change. When you're here, you're on a different planet. Your psychological and needs to get approval is not going to come from the market. The measure in this business is trade plan. You have to lay the rules out for you that work. Not mine, not another trader's. In TraderLab, we have all different types of traders, different time frames. Some trade the news, some don't. Some just trade. I trade whatever shows up based on my plan, and that's what I do. Other traders have different priorities. I don't trade in the reports that I know that can be disruptive. I don't trade when the book thins out because of risk management. I also just trade. And over time, if in spite of the randomness of anything, which is, and I've traded through 911, Desert Storm, the 87 crash, there's all kinds of stuff that comes out. And in the end, it's trade plan, risk management, and over time, in spite of outliers, which can always come, do you have an edge, and are you a sustainable trader? Goal at TraderLab is to help you become first sustainable. And you maintain yourself and go through a learning curve. There's no shortcut. There's no do this and then it's going to be a wonderful experience. The only one thing you need, you go out on YouTube, and to me, it's an abysmal location for traders to get education. You got to vet everything for yourself. Everybody has random winning trades. And we all think because we see randomness that it has an edge. And most of us, when we start out in the business, we are experiencing random outcomes. But the fact that you have winners with something, if you actually keep track of it, it might be a guaranteed loser in a random environment. So yeah, you have winners. So we always think, well, look at that. I had winners. Let's make it better. I call that Trader Groundhog Day. Work hard, wake up in the same place. I did it for years. Why can't I make it better? Well, maybe it's because it has no edge and it can't be better. You see? Would you keep trading a process that is guaranteed loser over time, even though you have random winners? That's a great question, isn't it? What's your answer? That's why I created TraderLab, because of what I went through. I worked so hard. I built trading systems. I did optimization, walk forward testing. I did everything I could over the years to try to solve the problem of randomness. And I thought more indicators, more time frames, and optimization. And I had one of the first optimization programs ever made that I could write code for. And this was in the mid 1980s, first time. PCs were new. My first computer was an Apple IIe, very high tech. You know, and then modems. I mean, so anyway, and when I started, there were no PCs and no internet. So I went through, as technology developed and indicators kind of came into the trading space. In 1978, we had Wells Wilder. I started in 1980. So, you know, I was kind of there. So I spent a lot of time trying to apply the math side of this in the indicators. But, and I kept always having winning trades and trying to make it better. But, you know, all of it was random. So I was always trying to fix randomness. But all I got was more randomness and more curve fitting and more inputs, more random inputs, more random behavior. So I had to eventually figure it out. Unfortunately, it took years to figure out that the problem was the randomness. And I was trying to solve for randomness with random inputs. The casinos play the same business we do. They are in an environment that's 100% random 100% of the time. Where does their control start and stop? It's how they play the game. When they let the cards leave the deck, the control is out of their hands. Well, I thought about it and I said, well, how, if I'm in a random environment where I have no control over anything but me, where does that control start and stop? It's the same as the casinos. They play their games that have an edge, but they also only have control up to the point they deal the cards. The cards are random. How gamblers play the cards is random. They have no control over that. So I started looking at this really more like a gaming process and accepting I can't squeeze risk out and create predictability, which is what our primal wiring is. You know, avoid risk, avoid that saber-tooth tiger. Let's be predictable. Let's be certain. How about it doesn't exist? You see, this is always the catch. Our nature is to assume we can get it, and we make the assumption we can get it because our primal wiring is to seek it. But what about if you're in an environment that doesn't apply? Then you got to solve for something else. Does that make sense? That's why TraderLab exists. To change your belief in the environment and your understanding of the environment and your understanding of yourself. Because if you don't understand your primal wiring, which is yourself, you're going to be driven by your primal needs to try to solve for an environment that's not aligned with those needs. So we have to solve for something different. Does that resonate with you? Well, if it does, visit the TraderLab. There's no cost for it. It is a community of traders that come together. And the point of this TraderLab is that we're all better together. Just like you, I'm still a developing trader. Doesn't matter, it's 47 years or hopefully 57 years, assuming the brain is still functional. But if it is, I'm still going to be doing this. It's how I make my living. Why wouldn't I? Hope you got something out of this, guys. Don't forget there's a special event tomorrow. Let me just put it up here. It's going to be on how institution move markets with order flow, how you can identify it. There's no cost. Use the link in the bottom of YouTube if you want to visit TraderLab or attend this. It's really good. How to spot large trader behavior, order flow insights. A lot you can learn. And I appreciate you visiting TraderLab. Thanks for your patience with the problems here from Costa Rica. Review these streams. Please leave a like if you're visiting in YouTube. Use the links down there if you want to visit the TraderLab community. I'm still able to monitor that on my phone. Pretty exciting. And appreciate all you guys. Have a good one. Look forward to seeing you soon. Appreciate you visiting the TraderLab today.